With Nadia Al-Bilasi in Dubai. She's a senior market analyst at Equiti Group. Nadia, now the Fed's given a less confident view on inflation, reversing the trend from last year. What's the main reason behind this?
Good morning, Taiba. So I think the main reason for this is the fact that the labor market has indeed cooled. We are seeing ups and downs with inflation. We're seeing sometimes that inflation is getting elevated, sometimes it's cooling off, but the last reading of inflation core CPI has cooled off, and this has given the Fed enough reason to believe that inflation is working towards its progress. So I think the fact that he stated that gave some relief to the markets, but still we did see a tech sell-off, and I think this was triggered by the beginning of the week throughout the DeepSeek saga that happened in the markets. So there was a lot of factors into play, but I do believe that inflation is closer to the target. I do understand that Trump's policies may bring more inflation into the economy, and this will be then a Federal Reserve problem to solve. And also Powell, he reiterated that the Fed will not answer to Trump's rate cut, basically because he wants more rate cuts. I believe that we might see a rate cut in March, depending on the economic data that we're going to see. I think if the labor market continues on cooling, then we could see another rate cut. I think that the GDP is going to be above 3%, continue to be above 3% this year. If it goes down more, then definitely we will need more rate cuts. I think Powell did retire that interest rates are still well above the neutral state. I do believe that we're still at really high levels. So I do think that we still need rate cuts, and we might see one in March.
And yes, this friction between President Trump and the Federal Reserve, how could this weigh on the Fed in the long term?
Well, I guess we're going to find out if the Fed works independently or not. This is actually going to be very clear in the coming months. Are we going to see Trump interfering with the Fed's policies? Because last year, we know from the Fed's dot plot that we're going to see only 2 rate cuts this year, but Trump's demanding more rate cuts. So if we do see an increase in rate cuts, then we will know for sure that the Fed will be impacted by Trump's policies and administration.
And the labor market has been somewhat strong, according to Powell. Could this change at all under the new administration?
I think with Trump's new agenda, with inflation rising, with corporate taxes going down, I think that we should see employment being elevated. I think that we're going to see more employment. So the labor market might actually get some relief. I think that there's consumer sentiment just a few days ago came at quite a low level because unemployment has been, in fact, increasing. It's above 4.1% now. There's a little bit more of a friction when it comes to unemployment levels right now, and this has a lot to do with the release of workers that we've seen over the past few months. So I think the labor market needs to cool down a little bit more before we see rate cuts, but I think definitely that we're going to see a little bit more volatility here and there.
Okay, Nadia Al-Bilasi, Senior Market Analyst at Equiti Group. Thank you very much as always.
Thank you, Ty.